Good morning, Krusty Crew. Oh, what is up? What's up, everybody? It's your boy Trey from Trey's Trades. I think that's what they call me. Welcome back to the channel. We're going to go over why AMC has not squoze yet. And this has been a question that's been talked about quite a bit. I think some people are getting impatient, and it makes sense, right? This battle has been going on for a freaking long time. We've gone through some trials and tribulations ever since late January, right? We got this set up back on what would have been, I'd say, January 19th is when we first got a sign of why, AMC was a potential squeeze stock. It ran up to 25 bucks. It dropped down to $5 for a long time, consolidated, and has been a freaking roller coaster of emotions, fear, uncertainty, and doubt that has been spread by the news, by XYZ different sources, and the apes who have been doing their DD, their homework, and will not give this thing up until it ends up squeezing. So we're going to talk about why this hasn't squeezed yet, and this is going to be our main bullet points that we go over here today. So I want to talk about the short ammunition. I'm going to kind of go over what I mean by this because it's a very broad topic that has a lot of different moving pieces. I want to talk about the psychology of charts, and then I want to talk about how you're going to know that the stock is squeezing, how you know that the game is over. They've kicked the can down the road as far as they can go, and they can't delay the inevitable anymore, and that's essentially what it is, right? So think about it like this. If you knew the exact day that AMC was going to squeeze, and even if it took 5 years and you had that once-in-a-lifetime opportunity to essentially hit the handle on a freaking jackpot spin and win $1 million at the casino, right? Would you take that chance? Would you wait the 5 years? That's essentially what this is, except we don't know the end day, right? This is about the best shot that you've got at a winning lottery ticket probably in your entire life. These are the best odds that I've ever seen, my very short 23 years of experience for a handheld lottery winning ticket. So let's just start off here and go through the video. So number one reason why this has not started to squeeze yet is because of short ammunition, right? Can kicking. Now, what do I mean by this? Well, if we come over here to the charts, I want to show you this, and I want to show you Ortex, right? So we can see that we had this first major run up from $2 all the way up to 25. This was a mini squeeze. I'd say this is a combination of gamma squeezing, which is the idea of call options that were previously out the money, pushing themselves in the money because of price action, and these end up getting hedged for by market makers. Now, what does that mean? Delta hedging, or essentially hedging against the fact that you're expecting that these call options are going to be exercised, is the act of market makers purchasing stock from market value so that they have stock available for if people decide to exercise their options. This ends up driving price up, right? So we saw this first run up to $25 in the pre-market, by the way. It says $20 on here because it doesn't show pre-market or after hours, but it ran up to 25 bucks. And that was a combination of a couple of shorts covering with gamma squeezing, right? And it ended up dropping back down. So why do I bring this up? Why am I talking about short ammunition? Well, back here we had 150 million total shares. Whether we like it or not, AMC stock did end up diluting some shares. So they had more shares to play with. Let's come over here to Ortex and I'll show you what I'm talking about. So you can see that according to Ortex, we've got 100% utilization, and this number dropped drastically after the massive squeeze. I mean, look at this. It was at 100% utilization and dropped all the way down to 68% utilization, which is an astronomical drop, right? This is because AMC stock ended up diluting a pretty fair amount. They did it in a smart way, right? They did it back here, I would say, somewhere in between these zones, and it ended up running up to 25 bucks, right? They had to do it. They had to dilute. However, the consequence of that was that we saw that AMC stock had more short opportunities, right? There was more shorts to play with. They were maybe able to get out of some of their naked short positions, and it made this very slow, long buildup back to where we are now at 100% utilization and where we've been hanging for literally over a week now, right? So since we had that share dilution, we had more shares available to short positions. They were able to play with more ammunition, right? More available shares means more shares on loan, which we've already freaking scooped up, man. I mean, they have absolutely destroyed all the shares on loan and are holding almost all of them, which leads to more short interest. In fact, you look at the short interest right now, 23.23% is actually higher than it was when we squoze the first time, which is something that I think a lot of people aren't really talking about. This is as squeezable as it's ever been, but this is still getting can kicked, right? They're shorting this position. They're delaying the inevitable, right? Now, this brings me into some of the more illegal acts that are happening, right? Shorting stock in and of itself, not illegal. We see that, clear as day, the stock went from $20 down to $5 because there was just not a lot of utilization. They'd covered. A lot of these shorts had covered positions. Not all of them, right? That's why we still had 68% utilization, which means that 68% of all available shares for lending were out on loan. But that's not maxed out, right? It leaves them some leeway so that if they get a bad entry on their short position, they can double down on the top, double down on the top, double down on the top over and over and over, which led them to here, right? 100% utilization, we saw that move up to $14. Now, look at this, guys. Look at this. This is not an accident. 100% utilization, drops down. You see it pop up to $14. We've been at 100% utilization for over a week now. I am certain, I am 99% certain when I say the next move is going to be more violent than $14, and it's going to continue this stair-stepping move to where we got to go. But nonetheless, I want to get into the legal acts, right? Naked shorting, ladders, algorithms aren't necessarily legal, but they are definitely abused, and IOUs. And these are all a sort of short ammunition in a way that they're able to manipulate the stock price to keep it down, even though this is not a sound and just short position to be held. So what is naked shorting, right? Naked shorting can be thought of as this. I'm going to scroll down here and just draw it out really quick. So if you have a single share of, well, we'll just say we have 100 shares, right? 100 shares of AMC stock. And all of these shares, these are all what are available for shorting, right? These are all out on loan. They've already been lent out. And you have another hedge fund over here. We're going to call him Hedgy. Hedgy over here wants to short again, right? But all the 100 shares are out on loan. So what happens is he can actually create a synthetic share, a share that does not exist, and short it into the market. So he just creates out of nowhere another 100 shares and shorts it into the market. Now, I've gone over this a million times, but in case you're new to the channel, this creates a shift in supply and demand, right? If you increase supply, if we're supposed to have 400 million shares that are circulating on the market, and all of a sudden, if you have, you have 1,000 of these, right? 1,000 of these 100, it adds up, right? It shifts that supply, which decreases demand, right? So let's say that this is high, this is low, this is high, this is low, right? This is supply right here. Now, every time that you shift supply over, you decrease demand. Supply, demand, right? That demand divergence point gets lower and lower and lower. So this is creating a synthetic selling pressure on the stock because shares are not supposed to be circulating like this. I want to bring this up because this is something that's been asked a million times. I don't have an answer for you, but I'll give you my speculation. Is the share recount, right? When is that going to happen? Has it happened? Adam Aaron hasn't said anything. AMC hasn't said anything. However, they talked about a share recount in a proxy statement. This is binded by the SEC. It's a legally binding document, and they said they're going to do a share recount, right? So we haven't heard anything yet. Does this mean that it hasn't happened? No, it doesn't mean it hasn't happened. Maybe it means that maybe it hasn't. I don't know. But what I think has happened is they did the share recount and they haven't said anything yet. Why do you think they took the 500 million share authorization off the table? They had said that the only purpose for that 500 million share authorization was for the long term, 3 years, 5 years, 10 years down the road. They would not take that off the table if they needed it in the short term, right? So I don't think it's a coincidence that they took that 500 million share authorization off the table and they haven't announced anything about the share recount yet. And furthermore, I don't think it's a coincidence that they're talking about this 43 million share authorization, either trying to take advantage of short-term market opportunities. I mean, think about this. If they know the actual count on AMC stock is higher than it's supposed to be, maybe it's 500 million, maybe it's 700, maybe it's a billion, who freaking knows, right? I've seen different numbers and different DDs. Not all of it's speculation, but we can assume that it's higher than it's supposed to be just based on the way that this is traded in the past, right? So if they think there's more shares circulating than should be and they can somehow crack down on this and expose it, that is going to astronomically move the stock price, which means that Adam Aaron and AMC themselves would be able to take advantage of those 43 million shares strategically in a smart business way to make money on the move up when all those shares are exposed and forcibly covered, right? So naked shorting is a way that they're able to kick this can down the road. They have been naked shorting the stock, I think, for basically the entire last 4 months, which is why we've seen so much freaking ups and downs, highs and lows, swings and valleys. You know how it is, right? So that's naked shorting. Ladder attacks, right? Now this is a project that takes place between two different hedge funds. Let's say that you've got two hedgies over here, hedge fund A, hedge fund B. They will use algorithm trading. And I've talked about this on my live streams before, but if you look at level 2s on AMC stock, you can see that they usually set up cent by cent spreads across the level 2s on the ask side, right? And what they'll do it on the bid side as well, is they'll buy and sell in very, very, very small increments for 1, 2, 3 cent gains so that they can slowly ladder the stock down. It's essentially, you can think of it like this, right? You've got hedge fund here, A, hedge fund B. Hedge fund A sells stock to hedge fund B, sells this stock, right? He sells 100 shares, maybe we'll say 1,000 shares, right? Sells it at $10. Hedge fund B will then come back and sell these same shares at $9.99 back to hedge fund A. And then we'll go back and forth like this in an algorithmic way to ladder down a stock price over and over and over and over until it ends up dropping it down 5%, 6%, 7%, 10%. And we've seen that happen day over day over day in AMC stock. I can almost guarantee you that this happened when it ran up to 14 bucks. Momentum was astronomical, ridiculous, stupid momentum. And it dropped off of very, very, very low volume. We've seen the numbers, we've seen the statistics. We know that the majority of people who have bought AMC are holding. The buying versus selling pressure is stupid. It's like 95% buying, 5% selling. So the only possible way that this could be driving down is by a combination of short selling, naked short selling, and ladder short selling, right? Ladder attacks, short ladder attacks. We've seen it happen over and over and over. And that's why another reason why AMC stock hasn't squoze yet, right? Last thing I want to talk about is IOUs. This is a big, big, big piece of this, and this ties into the supply and demand chain that I was talking about here just a second ago. But the IOUs create synthetic selling pressure on the stock, right? So if we're supposed to have, let's just look at the total float on this. Total float is 417 million shares, right? So if we're supposed to have 417 million shares, but you've got maybe 2 times as many shares out as they're supposed to be. Let's say it's 850 million total, right? Which is entirely possible. It's speculative, right? Nobody knows. Nobody knows the actual number of shares circulating, except for maybe AMC and Adam Aaron. But speculatively speaking, if there's 850 million shares that are actually circulating in IOUs, right, that is going to affect AMC's stock price. It's going to keep it down. It's hard to make moves like that when there's shares that are out that shouldn't exist. Think about it like this, right? Likely the apes are holding these IOUs and synthetic shares. Why do I say that, right? So there's a couple different ways that these come to be. Failure to delivers, FTDs, which are essentially call options, expire in the money, and they are not delivered, right? They exercise their shares, their options. They don't get their actual shares. They get IOUs instead. This is one way that IOUs can circulate into retail investor hands. Another way, right, is if you have hedge funds that naked short into the market. Every transaction is between 2 people, right? So if they're selling the stock, somebody has to buy the stock. And the people who are buying it primarily are you and me, the apes, the retail investors, right? Which means that we are likely holding a lot of synthetic shares, IOU shares. And this means that the majority of actual shares being held are probably out on loan, being held by institutional investors, or being held by the company itself, right? And this is creating an immense amount of selling pressure. Now, don't get me wrong in the least bit, right? This is not going to hurt us. We're not the ones that are going to pay for that because we held up our end of the deal, right? We pay for stock in expectation that we get stock back. This is going to come back into the hands of market makers, hedge funds, all of the people who handle the transactions of the actual stock itself. They will get slapped. Hedge funds will get freaking clapped. It's going to be bad. And that's what's going to end up moving the stock, which brings me into my next point, right? I want to talk about psychology of charts. Why? Another reason why this hasn't squoze yet. Now, I've talked about why it hasn't squoze in terms of the shorting, right? So I would say this is 90% of it. 90% of why this hasn't squoze yet is because of hedge funds that are manipulating stock, kicking the can down the road, and waiting for their freaking last day on earth. They're dropping every last drop of blood onto the ground. They want to be bled dry if they're going to get out of this freaking stock. Next is the psychology of charts. So I've got 2 boxes kind of zoned up right here, right? I've got this zone right here and this zone right here. And it's no coincidence that both of these times were right before some pretty decent moves on the stock. Now, what do you see that's in common, right? You get about 1, 2, 3, 4, 5, 6, 7 straight days of nice green upward trend. 1, 2, 3, 4, 5, 6 straight days of nice green upward trend. And as well, you have a nice bump in volume. So let's look at this, right? You see a steady increase. I mean, outside of one little asterisk and outlier right here, and an increase in volume. You jumped up from 160 million to 249 million, 179, 62, 265, 434, 391, and then the massive 1.2 billion day that'll go down in history forever, right? Those are 2 things that I am looking for when I'm waiting for AMC stock to squeeze, and that is psychology of charts. And I'll show you this as another example, right? 6 straight green days right here, and a steady increase in volume. 128 million, 39, 165, 263, 333, and then 439 million. On this day alone, you saw the entire float of the market, the entire float of the stock circulate one time over. And if apes haven't sold, right, if the majority of stock is being held by retail investors by apes, this leads me to believe that there are IOUs, synthetic shares, naked shorts circulating in the market. More shares than should exist. And I don't think AMC is stupid. I don't think they're dumb. I think they see this. They're like, holy Toledo, Bob Saget, this is a bunch of bullshit. It's a bunch of shit. It doesn't make sense, right? On this day alone, 439 million shares were traded. Either way, you see the exact same trend both times. Now, human psychology is very, very, very simple. The psychology of charts is fear and greed. People want to buy when a stock is running up. They get greedy. It's the FOMO, right? And people want to sell when the stock is going down. That is the basics of human psychology. Now, think about it like this. If you were just a random ape who knew nothing about AMC, because that's essentially what we're looking for right now. We as retail investors who want AMC stock to go up have very saturated markets in AMC stock, right? The people who are in AMC stock right now are probably pretty close to as much liquidity as they're going to push into the stock. Maybe not, right? I'm going to continue to add. I'm still waiting to get paid. But nonetheless, you are looking at the retail investors who don't know anything about AMC. So why would they take a buy and a stab at AMC stock right now if it's trading sideways, if the volume's low, it doesn't look very juicy right now, when there's other stocks in the market like Microvision, Mara, TCAT, all these other stocks that have ran stupid amounts over the last couple of months? Why would they pick AMC right now, right? And that's no ding on AMC, because I still think this is 100% squeezable, but I don't think that right now the chart setup, the psychology of the charts is there, right? Because people want to buy when the volume is slowly increasing. They want to buy when the stock is slowly going up. They want to buy when all the indicators are lining up. You've got the 15 MA crossing over the 200 EMA. You've got really great bullish action. You see some shorts starting to cover, right? People will hop into this, in my personal opinion, when everything is almost at its road end, right? They're going to wait for that volume to start picking up. Get back into the 300 million, the 400 million range, the 500 million range, maybe the billion range. I think the second time around, this is just an opinion, but I think the second time around, we're going to crush this 1.2 billion in volume number, because this happened on 150 million shares of total float. So I think that is going to go out the window. You're going to see maybe 2 billion, 3 billion, 4 billion in total volume when this thing freaking squeezes, which leads me into my final point. How will you know when this is going to squeeze, right? I think that's the question that everybody wants to know. How are you going to know that this is freaking game over? There's 4 things that I'm looking for, right? I'm looking for volume, I'm looking for trend, I'm looking for news, and I want to look at the other stocks. So let's dissect these one by one, right? Volume. We need the volume to go up. It is true that stocks can squeeze on low volume, right? It's entirely true. But with AMC stock, I don't think that's the case. And it's because we've got 417 million total shares outstanding, not outstanding, but in the free float. And then on top of that, I believe personally that there's a lot of naked short positions that have been sold into the market, meaning that a lot of us are holding IOUs, synthetic shares that should not exist, right? Which dilutes the actual price of the stock. It dilutes the demand. So in order to get that going, we need the volume to go up, because there are likely a lot more than 417 million shares that are actually floating in the market right now. So I'm looking for 400 million, 500 million, shares of total volume, and it has to be a good majority green volume, right? That's what I'm looking for to get this back into the momentum, to swing back into that $14 range, which I think is ultimately going to lead us to the promised land. Right? Next thing I'm looking for is overall trend. So you want to see an uptrend, a continuous 1, 2, 3, 4, 5, 6, maybe like a whole straight week of good, slow growth trading volume that is going to lead us to the promised land of getting some shorts to start covering their positions, right? That's the next thing. And you can tie this into volume as well. A slow growth in trend in total volume. You can see that this has happened 2 times. As a guy who likes technical analysis, I pay attention to trends, I pay attention to history, right? We can very, very easily analyze this. Both times that AMC has had their most major moves in the last 4 months, the same thing happened. You had a straight week of nice, slow, steady growth, and a nice week of slow, steady growth in volume. Happened here, right? Slow, steady growth in volume. Slow, steady growth in volume. Up to $14, up to $11, right? And it's actually 3 times. We've seen it happen 3 times. Slow growth in volume, slow growth in price, slow growth in volume, slow growth in price, ran up to $14, right? We're looking for that again, and it's just not there yet. We had a slow and steady setup for it right here, right? We had this slow 1, 2, 3, 4, 5, 6 straight days right here, and it just didn't end up panning out this time, right? I personally believe that you're seeing a lot of shorts that are naked shorting the stock. They're pushing this down as heavy as they can, and it might take a week or 2 or 3, right, to get back into that heavy momentum. But keep the macroscopic trend in mind, guys. We're still setting those higher lows. We're still setting those higher highs. This is squeezing up. This is making its freaking move no matter how long it takes. News is going to be the next piece. And think abstractly when you think about news, right? This doesn't need to be something as simple as AMC releases some stupid, ridiculous article, right? I mean, that could definitely be the catalyst. But what I mean by news is maybe this gets picked up on Reddit. Maybe this gets trending on Twitter again. Maybe StockTwits goes absolutely apeshit over AMC stock. Nonetheless, you need some sort of catalyst that is going to drive momentum and keep it moving for a very long time. If you think back on when this stock ran up to $25 the last time, this was all anybody was talking about. That in of itself, that kind of hype, that kind of rumor, that kind of catalyst was what drove it all the way up to $25. As it sits right now, right, if you're an average retail investor who knew nothing about AMC stock, there's nothing, I mean, you'd have to dig really deep into the weeds. I mean, think about this. All the DTCC filings, all the DD that apes have done, all the news, that takes a lot of time to digest. That's a lot of freaking research, right? So at face value, you need a catalyst that is going to attract, it's got to be a sexy freaking catalyst that is going to get people excited to look at AMC stock, right? That's going to be the next thing that we're looking for. Lastly is other stocks. This is how you're going to know that it is freaking game time. It is squeeze time. I 100% believe this is going to happen again. You're going to see not just AMC, not just GameStop, but a handful of other stocks that are going to squeeze all at the same time. It happened back here when we scrolled up to $25. I remember it was BlackBerry, Nokia, AMC, GameStop, AAL, COS, I think CTRM had a good move, Naked had a good move, Sundial had a good move. There were so many stocks. There was like 10 to 15 little micro-cap stocks that were heavily shorted that all had stupid, ridiculous pushes or mini short squeezes. And you're going to see that happen again. And that is when you're going to know that it is time for freaking ball. It is time to set this thing up and to get moving. And that's what I'm looking for to see this thing freaking squeeze. So that's kind of why AMC stock hasn't squozed yet. That's what I'm looking for a news, for a catalyst to get this thing moving. And this is not a dead cat. I'm going to tell you right now. I've said it before. I'll say it again. The day that this is a dead cat is when the media stops talking about this, when the apes stop talking about this, and that utilization drops all the way back down to previous levels. And there's no freaking way they're going to make that happen, right? Let's milk these freaking hedgies dry. That's what I've got for you guys today. If you enjoyed the video, please drop a like and consider subscribing. Blah, blah, blah. You know the whole spiel. Catch you guys all later. Thanks for watching, my friends, my family, my fellow Gorilla Gang. Much love. Peace.